Meredith Whitney called for sizable defaults in the muni bond market 2.5 years ago and recently reiterated this dire warning despite the fact that it hasn't come true. One analyst says he's helped readers of his newsletter make tons of money going against Whitney's advice. Joining us is Dr. David Eifrig, investment analyst with Stansberry Associates Research and editor of Retirement Millionaire. Thanks for being with us, Dr. Eifrig. Now, not only was Whitney wrong in her call, but her call actually knocked down the prices of muni bonds so that your clients could actually make even more money than they otherwise would have. Is that right?
Yes, that's true. You know, she was wrong then, and I think she's wrong today. She created fear in the market back then, and I think at the time in late 2010 when she made the call, Mexican bonds were trading as if they were less risky than California bonds. I thought that was absurd, and at the time I recommended to my readers that they get into municipal bonds. And that cohort, they are up close to 36, 37% over 2 years, a little over 2 years.
Yeah, I've talked to other fund managers and wealth advisors about this same Whitney phenomenon, but then I was kind of surprised when she came out and reiterated the claim this month in a pretty prominent story. That is in the month of April. Is it just hard for these advisors and these big prognosticators to kind of just take the hit and say, look, I blew that one, I'm wrong, so you just double up and you stick with it?
It may be. Also, you know, fear sells a little bit. I don't understand it because California is starting to have a budget surplus. Other places, I travel around the world, I travel around the U.S. a lot, starting to see kind of the slowing, grinding economy. That means more tax revenues for states. That means they can pay the bonds off. So I don't understand the call again.
Yeah, and tobacco bonds are another one where they're almost guaranteed revenue. They're never going to default, and yet as soon as someone starts a little fear, it just kind of spreads. You have a couple of funds that you've talked about bond-wise. You mentioned three new, or a Nuveen fund and an Invesco fund. Talk about those. Yeah,
so the three funds I've been in, and I might add, we initially got readers into this back in 2008 when we had the collapse in the stock market and everyone thought the end of the world was coming. People who bought then, that municipal bond fund is up about 88%. But yeah, these three funds they invest in a basket of municipal bonds, and so your risk is diversified. So if you happen to get a default in one or two bonds in the portfolio, you're not at risk, you know, as opposed to buying individual bonds. So yeah, it's three different bond funds that I have readers in.
Okay.
The latest one just last month.
Now, given that Meredith Whitney was so wrong on her call, does she no longer have the power to drive down those muni bond prices and make them a good investment for your clients?
Well, I think she has less power now that I'm in the game. I don't think she has that much power anymore. All
right, and one last thing. They tell me to wrap, but explain the lumberjack beard. This is based on a vow that you made to your readers that you will sell only when you have a loss position that closes out. How long's your streak going?
I've got 118 winners over 2 years. When I hit 100, we started doing this. It's a trading service, but yeah, I'm going to grow like a hockey playoff beard until we lose one. So.
Wow.
It's starting to get scruffy.
I think the people who know you best are kind of praying for a little downturn in your results. Thanks for being with us today, Dr. Eifrig.
Thanks for having me.
Okay.